This episode is brought to you by Koyfin. Koyfin is one of the fastest growing platforms for financial data and analytics to research stocks and understand market trends. Imagine a Bloomberg Lite with tons of high quality equity and macro data, a powerful graph engine that can show it all clearly, and a user interface that doesn't look like it was built in the 1990s. If you're an individual investor, research analyst, portfolio manager, or financial advisor, do yourself a favor and check them out. You won't regret it. Sign up for free at koyfin.com. That's KOYFIN.com.
Hit it. It's Friday, December 10th, 2021, episode 160. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we take a little detour from macro and large cap stock picks to chat with Mariusz from MicroCap Explosions. We learn about his investing methodology and why all Canadians want to do is get high on pot and look for gold. Then Rob Koyfman from Koyfin joins us for a great talking charts where we have a wide-ranging discussion about opportunities he sees in the markets. We talk Ford, Tesla, and what he sees during this Fed hiking cycle.
We then end with our segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way, so stick around. We got a great show. Lena, hop on. What beer are we featuring this week?
This week we are drinking Ace Hill Pilsner.
Ooh, let's try this out. That's a nice clean Pilsner.
Refined and easy drinking, opening with lightly earthy aromas leading to a palate with medium body, light bitterness, and balancing subtle malty sweetness.
Nice. But before we get to the side effects, we got to give a plug for the Market Huddle merch store, right?
That's right. Everybody get your Lord of Crayons merch or our Market Huddle merch from...
What a better gift for Christmas. What could be better, actually?
Great for your friends, perfect for your enemies. Please get your merch at markethuddlemerch.com.
All right. Kev, give us some side effects.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include the Delta dingleberries, Crayola poisoning, that's for Patrick, and the front month flu.
Oh, nice. All right.
It's our pleasure to welcome to the show Mariusz from MicroCap Investing. Mariusz, I'm not even going to try your last name.
Mariusz Skonieczny.
So, Mariusz, you are a little bit different in terms of your background isn't on Wall Street or Bay Street. You actually, not even from North America. Why don't you tell us a little bit about yourself, how you came about to be a microcap expert?
Right. So, it's interesting. You said, not from the financial background. It kind of actually, started with the disadvantage, I guess, because yes, I was born in Poland. I came to the US in 1996, like right after my first year of high school. So that's where kind of like the disadvantage started, because you come in with no language. I didn't speak any language. And then within a year, I have to take those ACTs and SATs to, qualify for college. So
you came on your last year of high school?
No. After the first year of high school.
Oh, okay.
So,
I see. Okay.
But then within 12 months in your junior year, right, you have to take those tests. So here I am taking those tests after 12 months of speaking the language, right?
Oh, wow. And so where did you come? You came to America. Where were you from in Poland, and where did you come to in the States?
I was from a city called Racibórz. The closest city that people might know is like Krakow or Katowice. So it's on the southern part of Poland.
Okay.
And I came into the Chicago area.
Okay, which has got a lot of Polish people. So,
yeah, that's right.
Right. And did you come with your whole family, or did you come on your own?
Yes, I came with the whole family. You see, my grandmother was a U.S. citizen. I was supposed to come to the U.S. when I was 2 years old. So it was like 1982, right before I turned 2. We were actually on the way to the airport.
Okay.
And a few hours before our flight, was communism. They closed all the borders. and they wouldn't let us out, and the country was closed for like 4 or 6 years or something like that. So then we kind of moved on with our life. My sister was born, and we didn't really think about coming to the US until it was like 1993, and it took us 3 years to get the papers, and by 1996 we had the green card, and we were able to come in.
And so what happened in terms of when you were 2? Was there something that your parents realized that they wouldn't be able to get out, and it was getting worse? Why?
Well, this was like in the early 80s. This was like, very much communism, and things were not so great. And my grandmother was already in the United States, so kind of wanted to help us have a better life. And so my mom was going to come at that time with me.
But I thought you were. Oh, I thought you weren't allowed to leave. Am I wrong? I thought that the Iron Curtain made it so you couldn't even go visit because they were worried that people were going to leave and not come back.
Well, I mean, at that time, you were supposed, you could have gotten a visa and leave.
Oh, you could have.
And that was the idea, that we were just gonna. I mean, the government didn't know that we were gonna stay.
Oh, I see. So you went and applied for a tourist visa, got it, and then they shut you down, and so you had to wait.
Right.
Okay.
Well, not just shut you down; they shut down the entire country. Nobody, like hours before our flight, they shut down the whole country. It was like a civil war. Like, yeah,
it's just shocking, and it's a lot of people have forgotten what it was like, or if they haven't forgotten, they're too young to remember with the fall of the Iron Curtain and all that. But I do remember that, and I actually have relatives as well in Poland, and my mom and we used to send stuff all the time because they couldn't get things like jeans and anything from North America was at a huge premium for them.
Oh yeah, absolutely.
Yeah. Okay, so you come to Chicago. You are forced to learn the language, and what happens from there?
Yeah, so I come to Chicago, and it was right in the middle of the summer between my first year of high school and second year of high school. So I start my sophomore year. I start learning the language, right? And by junior year, you start preparing for these tests to get into college. And so, of course, I took them, and I did well on the math and science, but not on the English portion.
Right.
So right away at that point, I felt like it set me back, because now I can't get into the school that I want, and I'm pretty ambitious. So there was no way in the world that I could have gotten into schools that could have gotten me on the path of entering the financial industry, whether it's from the hedge funds angle or investment banking or anything like that. So no, it's just finished it, and I just went into like a regular community college to get my first 2 years out of the way. And then I went to IUPUI, which is Indiana University, Purdue University, Indianapolis. So I got my degree from IU at that school, and got my finance degree. And but I didn't really want to pursue school any further.
Right.
In other words, getting MBA or anything like that. At that point, I just started to realize that school was kind of wasting my time. I had good grades and everything, but I was ready. I was ready to go out and do things on my own.
Okay, so what did you do?
So during that time, I actually read those Poor Dad and Rich Dad books on real estate.
Yeah.
And that kind of got me interested in the whole real estate space. And I figured, well, I don't have any money, so the best thing I could do is learn how to value real estate. So I became a real estate appraiser on the residential side, and then eventually I moved up on the commercial side. And then I also became a broker, where I was working for a company called Marcus & Millichap, and I was with a group that sold apartments in the Midwest. And during this entire time that I was in real estate, I was also studying on my own about the stock market. I read books on Warren Buffett. And at that time, I realized that I thought I had passion for real estate, but I didn't. And I had more passion for stock market, for learning about businesses. And when the financial crisis of 2008, 2009 happened, I literally on a dime, I went to my boss and I said, I'm going full time into stock market investing. It's a great time to do it. They thought I was crazy. And that's how I entered that space.
So
of stock
you
market
just quit your
investing.
job and you started to research stocks. Now, what did you find? Where did you find your edge? Like, tell us a little bit about this journey in terms of your kind of evolution into a microcap specialist.
Okay, so at first it was a great time for me to start because the stocks were very low, and for my personality, when there's panic, I thrive during that kind of environment. So it was a perfect time to do it. And at first, I just started investing in just regular companies, and in 2008, 2009, anything you touched pretty much turned into something good. But what I noticed is that I was more interested in companies that were not followed very much as everybody else was following them. And so I kind of gravitated towards the smaller companies that were not very much followed. And it kind of, I got to start with actually Warren Buffett's question when on one of the Berkshire Hathaway meetings, he was asked, "What would you do if you had $10,000 to your name and you had to invest?" And Buffett said, "Well, I would go into the obscure places, smaller companies, because this is where the biggest mispricings are possible." And that kind of very much resonated with me, and that's kind of like what took me down that route.
And so that was at one of his like a Q&A at one of his meetings. Do you remember what year it was? Or has
No,
he
I
said that
don't. No,
numerous
I
times?
don't. Yeah,
I
yeah, of course.
Because I've heard him say similar things. I've just never heard him say that he would go and go into the microcaps. Okay, so
Well, he said he would go into the smaller companies, obscure places, and literally start with an A and go with A through Z, one company at a time. Uncover all the rocks, and you would find opportunities that the financial industry would never present them to you, because the financial industry in general is not set up to cover those kinds of companies.
Okay, and the reason for that, I don't know, is that the reality is that there's no corporate finance business in it, and they're too small or they don't care, and there's just no incentive, so therefore there's no research reports, there's no promotion, and so let's walk you through. Let's walk through in terms of how you go about doing this. So what do you do? Do you grab the kind of the internet and just get on and start going through them, just like Warren Buffett suggested, A to Z?
So first, I want to identify places where people are not interested in it. So
Okay.
secondary exchanges such as OTC, which is not even an exchange, but let's just call it an exchange. OTC, over the counter, or TSX Venture or Canadian Stock Exchange. I start there and I go through one company one at a time. I don't use any screens because you miss a lot of the things when you let the computers find things for you. One company at a time, and a lot of times it's quick to eliminate some of the companies because I'm not interested in companies with no revenues or gold and silver. So they're quickly to eliminate. And I would say that 80 to 90% of the companies that are listed on these exchanges, I wouldn't touch for nothing. But
Well,
then there's
I was
those,
going to say there's
yeah,
all sorts of fraud and manipulation,
yeah.
and part of the reason that people are shudder when they think about those exchanges is because they have been left with a bad taste in their mouth. So how do you avoid those names? Like are there some warning signs, some simple things that you've have steered you right?
Well, after I identify that something is interesting, whether it's a decent looking business, they have revenues, they have an interesting product, that's when I roll up my sleeves and figure out if this is true. So, in other words, I get on the phone, I call the customers, uh, ask them why are they using this product? Is this product really solving the problem? I reach out to the board members one by one, to the employees, former employees, suppliers, customers, and just start asking questions because I want to know if the company's for real, if the product is for real. If I can buy the product myself, I'll do that. But that's how I figure out whether the story is for real. I want to know who's the people behind the story, the CEO. Is he clean? Is he an honest guy? And just things like that. I call this, I didn't term this, but it's called a scuttlebutt research, where you reach out to the people that are involved with the company or were involved with the company in the past, and you do your research like that, in addition to, of course, reading the financial statements that are provided by the company.
Mariusz, it's very novel. You're actually doing fundamental research and finding names that way. Why don't you give us an example of one of the ones that you found and walk us through how it worked, what you noticed along the way, and what that meant in terms of the returns that you achieved through buying it?
Okay, so I'll tell you a success story that I had, and then later I will tell you some of the things that I am involved right now.
Okay.
So the biggest success story that I had was a company called Oracle. Oracle was I still own shares, so it was trading on TSX Venture. And what was interesting about this situation was that Oracle got involved in a legal battle of a copper deposit in Mexico. So in 2017, there was some people were already doing some research that copper was going to be hot because we're going to have more electric cars, which take 4 times as much copper, that the people from developed nations were going to start using more copper, and we don't have that much supply. So some people were already looking at that. So Oracle got involved with this property called Santa Tomas Copper Project, and it's a massive copper deposit that is pretty well known in the geological community. They even included in some of the geological books at the universities. And in 2000, a Mexican guy owned the property, and he sold it to a guy from Arizona, a crook. And then, so the guy bought it and never paid for the property, but he took the ownership of the property, and that Mexican guy didn't have the money or legal expertise to get the property back. So Oracle came in and they said, we're going to get you the property back, and in return, we're going to earn 50% interest in the property. And the legal situation was complicated because it was in 3 different jurisdictions. It was in Bahamas, Mexico, because of where the property was located, and the United States because of where the crook, was located. So by the time I got involved, it was interesting because they sold the property. Oracle sold the property to another company that I was involved with, and that's how they came on my radar screen. And because I had an ownership in this other company, from time to time I would call Oracle to check out on my other company because they happen to share an office. And it's common for some companies in Canada to share office together. So I would call Oracle every month to figure out the scoop on the other company. And then at some point, I saw that there was this activity on Oracle stock, and I figured out that it was because they were involved in this legal battle that they won in Bahamas, and they were just about to roll in their interest of Santa Tomas into Oracle. But before everything was going to be solved, the property needed to be registered correctly in Mexico. So just because they won the legal situation in Bahamas, they still had to take some steps to register it in Mexico. So they were fighting the battle in Mexico, and they were also fighting the battle in Arizona. And what was interesting about it is that the 2 entities that were fighting the legal lawsuit, Oracle owned both entities. Like, I kid you not, Oracle controlled and owned 2 entities that were fighting with each other. And then the lawsuit in Arizona was about taking that, foreclosing or through a receivership, taking control over that entity that they were fighting with. So what I was doing in Arizona was I was following that lawsuit, and I was buying the legal documents directly from the courthouse. Every time the courthouse posted a legal document, I got on the phone, I paid $2, and they sent me the document. So by looking at these documents, I realized there's no way they're going to lose, because the other party was just two morons. One was a nurse, the other one was a former car mechanic, and they had no foot to stand on. And every document that I was reading, the judge was just telling them, no, you're wrong, you're wrong, you're wrong. And even though I didn't have any legal background, I was like, they committed fraud. There's nothing there. They're going to lose, and that's what ended up happening. They lost in Arizona. Then they ended up also losing in Mexico. But the bottom line was that the property was worth a minimum of $500 million. By the time I discovered them, the market cap was like $3 million. So I bought a lot of shares based on that fact, and of course I was proven right. The long story short, they win it. They register the property in Mexico. The stock goes from like 4 cents to recently it was at $3, so almost 100x. I put like 60,000 or 70, I don't remember. And today it's worth like $4 or $5 million, and I still own the shares in the company. But it's an example of a situation where it was right in front of everyone's face on TSX Venture. I was told that people didn't want to look at it because they don't get involved in the legals, and they put legals in one category without reading them, just reading them and realizing that there was like zero risk of them losing it. And now that they registered the property through my website, I actually helped them to raise some money because they were caught up in this legal battle for 20 years, and now new rules came on that properties have to be 43-101 compliant. So now they have to like re-drill some of the holes to make sure that the copper is there, even though it's been drilled and had a feasibility study done years ago. But because of the 43-101 standards, they needed to re-drill it. So I, with my website, MicroCap Explosions, and about 300 members, we raised some money. The company had some other investors. So we raised about $13 million, and now they're drilling, reconfirming. They just released some drill results. And so they are in the process of doing this. But so that was, a success story.
Okay. So let's talk about some of the other things that interest you now. What other kind of names or situations are you involved in and are I think are pose opportunities?
So recently, before COVID, I was looking at my Oracle position and I knew it was going to be successful, and I was thinking, okay, what am I going to do next? So that's when I went through like 5,000 or 6,000 companies on OTC, Canadian Stock Exchange, TSX Venture, Toronto Stock Exchange, NASDAQ, and New York Stock Exchange, just kind of going through the companies, making a big list of companies that I like, no matter what price, just to prepare for the future. And I came across this company before COVID. It was called iLookabout, and they were in the real estate appraising space. So remember how I told you I used to be a real estate appraiser? So it caught my attention. They are making changes in the real estate space by making appraisers more efficient, because what happens is that the entire financial or mortgage industry is being slowed down by the appraisals. It takes like 30 to 50 days to close on a transaction. And why is that? Because there's shortages of appraisers. The average age of an appraiser is 62 years old. It's their second career most of the time. Very few people go into appraising like I did out of college. So for them, it's either they go and sell candles or they become real estate appraisers. And they're not very good with technology. So the entire industry is being slowed down. The entire mortgage industry is being slowed down by the appraisal industry. And so I saw this company. I was like, oh, it's interesting. But I didn't really invest in it before COVID because the mortgage industry is slow. I figured these appraisers are not going to change technology. But when COVID hit and people couldn't inspect properties, I was like, okay, now the industry is going to look at it. It's going to change. It's going to be forced to change. It's going to be forced to adopt technology, or they're going to, die. And so I started researching this company, and what I learned is that the CEO at the time, he was a real estate expert that founded another billion-dollar company, Altus Group, and he acquired this little company, iLookabout, from Canada, that at that time was just involved in the tax assessment, providing valuation services to the governments, and he was putting together a company by acquiring different technologies and different data sets and different clients, because in that space you need like master service agreements. And so the stock was about 10 cents. Today it's at $1. And I didn't buy it at that point. I was literally late for about 2 weeks. So I had to pay about 30 cents for the stock. But what happens is that they're putting this company together that literally revolutionizes the appraisal space. So because they have all this data, when you're a real estate appraiser, you have to fill out this appraisal report by hand. You have to put in the information on the property, zoning, and then you have to find comparable properties to support the value. And it's all very time consuming, and that's why it takes an appraiser can do one appraisal per day, max maybe 1.5, but not much more. So that's why it takes so long to close a transaction. What this company did is they put together all these databases and technologies that allowed them to populate the appraisal report so that the appraiser can be done with the appraisal, like 80-90% of the appraisal can be done before they even inspect the property. So it's like a complete game changer for the industry. And recently, the biggest wholesale lender in the United States signed up for this platform. And now the biggest names are testing or looking at this platform. And barely anybody is paying attention because people don't understand the industry. They have no idea what's going on in the appraisal report. They also put some together companies where not only do they do appraisals, but they do title. So the general public doesn't understand anything about appraising. When it comes to real estate, the general public only can understand what the realtors do, but they don't know what's going on in the appraisal space. They don't understand how title works. So I was able to find this company while they were putting it together, understand all the pieces because I had inside knowledge of the industry. And now some of the biggest players are signing up on the platform. The stock is up 10x already, but it's probably going to be up another 30x, and barely anybody is paying attention.
And so do you find that there's a lot of stocks like this in terms of just companies that are forgotten and nobody really cares about? And how many opportunities do you come across like this?
Well, right now I have more opportunities than I have money for. But it's not a lot of them. It's a handful of them. I would say right now about 6 of them. And I'm very heavily invested in only 3. But, you see, the thing about like TSXV, OTC, or Canadian Stock Exchange is that, like, historically, if we look at TSX Venture, how it was put together, it was put together by a merger of like 3 separate exchanges. It was an exchange focused on mining. Another one was on oil and gas, and then something else, and then technology. So the majority of investors on TSX Venture, I always joke about it, what are they interested in? Pot, mushroom, gold, and silver. So I joke about how, people on TSXV, they get high on pot and they're looking for gold. That's all they care about. And so if you give them a technology company or something that's like real, that have real customers, real solutions, they're not interested. They're interested in getting high on pot and look for gold. That's all they care about.
Right.
So, like, it's an opportunity for me because I can look at those companies. I can be like, oh, there's something here. Like, they're really truly solving a problem. Like this company that I just said, their name is Voxter, and I just came up with 11 videos on my YouTube channel explaining this whole company. But they're not interested in that. But I can go in and I can look at it. It's like, yes, appraisal industry, it's a problem. I know it's a problem because I work there. And yes, there's shortage of appraisers. So, okay, if there's a problem, then there's an opportunity. And then here I'm looking at the things that they do, and I'm like, yeah, yep, they are solving the problem. I can see the pieces together. I can see how it would make me as an appraiser faster. And then I can see why the biggest lenders in the country are signing up for it. I can totally see that.
Well, Mariusz, there's some fascinating stuff. We don't want you to give away all your secrets. So why don't you tell people about where they can reach out to find out more about your firm or your service and yourself?
The best way is to go to my website, MicroCapExplosions.com. And it's a paid service, but you will also have links to my public YouTube channel, my books. But yeah, it's microcapexplosions.com is the easiest way to do it than to spell you my name.
Okay, sounds great. Well, thank you very much for all your time.
Thank you.
All right, Patrick, it's time for Talking Charts. We're going to get Rob on, but before we do that, we got to go through our top 3 things.
Yeah, so last week we were talking about will the risk-off trade continue next week? And, well, no, we put in that bottom right at the 50% retrace, level held right in there, and the market's right back to the highs. It's certainly seems to have been just a pretty straightforward market correction, at least now. Do you think the Christmas rally is just going to stay like a little Santa Claus rally to the end of the year?
Well, I would argue that although the indices stop going down, the average stock is still trading like crap, Patrick. So
yeah.
It's a little more complicated than that. But I actually am getting more and more constructive that we are going to see Santa Claus and that he is going to come, and hopefully he doesn't wait too long.
Right. The other thing we were watching and asking the question is the short-term low in for oil? And yeah, that was pretty much bang on. I mean, the snapback, we had a solid $10 rise off of the intraday low, and it seems like a tradable low is in. The bigger question is it going to be also the intermediate low, or is it just this is just a reflexive rally? Do you think there's room for oil to go back for another retest of that low, or is that an actual low that you can lean on now?
I think that's the low. The low's in. Having said that, I'm probably more constructive on the long end of the oil curve than the short end. The front end is just so elevated compared to everywhere else that it's much more volatile. So if I was to be trading oil from the long side, I would go out the curve.
All right. Number one is we were talking inflation numbers. We'll talk about it in the bet, but you were right and I was wrong. All right. So let's go on.
What are we watching next week?
The one thing I wanted to ask is, does that S&P 500 manage to make new highs? And we ended up closing at the week high over here. The S&P 500, this is just using the SPY here. It's over the 470 level. And I mean, we're pretty much closing at a higher level on the SPY than at any point that we had to close. Like obviously on an intraday basis, we had a number of times it printed higher, but the S&P just seems like it wants to have a Santa Claus rally. And so the question is, do we get a fresh new 52-week high breakout? That's certainly one thing I'm watching.
All right. Now what's number 2?
OPEX.
Oh,
yeah.
You love this. You got to put it in there.
You know what? How can we not throw it in every once in a while?
Yeah.
Like once a month.
To be fair, yeah. Well, to be fair, this is a quarterly one, and it's a big one. And not only that, Patrick, not only is it a quarterly one, it's also an end of year one.
Yes.
I suspect that we will get a little more action that way than usual.
Yeah, and so there's a lot of built up gamma, and it's interesting though because we're now above gamma flip levels. So this is actually. Do you think that we could be like a vol suppressing week where just things kind of pin in and things just along these previous highs of the S&P, things just kind of stay quiet for the rest of the week?
I don't want to give away too many things because we still have to make our bet, Patrick.
All right. So number one is central banks, and they're all piled in together. FOMC, Bank of England, ECB, all coming. It's going to be a middle of the week gong show.
That's a good way of putting it. A middle of the week gong show. I got to think if you're a central bank, you're trying hard to not mess up. You the last thing you want is to be in the in the newspaper because you did something stupid. And so Patrick, I suspect that we're going to get central banks being a little more dovish than the market expects.
Ooh,
yeah,
that's a pretty bold call.
Yeah, I just feel like that. And not only that, I also think, although we try hard not to talk political, and the coronavirus is obviously one of those things that brings out many people's different opinions. Let's just say that. Although I am not concerned about the uptick in number of cases, because I suspect that it'll most likely be that the actual sickness from the cases are less worrisome than before, I suspect that you'll find central banks are still forced to err on the side of being conservative, or at least erring on the side of not getting too tight as the uptick in cases keeps occurring.
Right.
And so I just think that there's still a lot of uncertainty, even though I don't think there should be uncertainty, but the reality there is. And so I suspect that the central banks, when they're faced with either a time to be hawkish, I'm not sure this is it. I just don't see it, Patrick. I just think that you'll find that they'll err on the dovish side.
All right. Well, let's continue this conversation with Rob. Let's get him on. So joining us here for the continuing to talk some charts, we've got our good friend, Rob Koyfman. How are you doing today, Rob?
I'm doing well. Nice to be here, Patrick and Kevin.
Yeah.
It's always a pleasure to have you on the show. And I'm still waiting for the next Freeport call. That one time you came on the show, you told us to buy Freeport. You're never going to live it down. You made a good call, and now I expect one every time.
Yeah, every pandemic, I'll make one call.
The real problem is you're busy, creating a whole product and actually doing programming and running a business and things like that. And I might be putting a little undue pressure on you with also having to come up with a terrific call.
Man, I love kind of keeping in touch with the markets and trying to figure stuff out, and it helps me kind of. Really use the platform, and I'm always like, when I'm trying to look stuff up, I'm like, wouldn't it be cool if we had this? And then we'll try and make it. So it's awesome to stay on top of what's going on.
So you do have some things planned for us. Why don't you jump into it and let's talk some charts with using the Koyfin platform?
Yeah. So the first chart that I wanted to pull up was the chart of where the Fed is in terms of interest rates. So I'm just going to pull up the Fed ticker here under the G graph, which is going to pull up my chart. And so this is going to give me the chart of the Fed funds rate over since 1972. And I'm just going to overlay the SPX here, our trend on the SPX. I think it starts a little bit later. And what I wanted to show, you have this really big, intense debate of what's going to happen when the Fed starts tapering and hiking rates. And I'm actually going to put the balance sheet on here as well. It's WALCL, I think. Yeah. And so what I have here is the balance sheet, the SPX, and the Fed funds rate. They're all on the same axis, which probably doesn't make sense. So let's put this on here and this on here. Okay, so now SPX, balance sheet, and Fed funds rate. And I'd say kind of like the big debate in the market right now in terms of the Fed's going to start hiking rates. I think it's priced for June right now, or that's the first hike is around June. What is that going to do to equity markets? Is that going to start the next bear market? And I would just kind of look at the previous hiking cycles and posit that when we went here from 1% to 6%, the market was able to digest that, and this was pretty well telegraphed, and this was kind of slow.
So that was the 2000 coming out of the .com bubble, the 2001 to the 2006 period.
That's right, and I would say the other interesting thing is you have this bear market, and obviously this is SPX. We could look at IWM or Nasdaq, but let's kind of use this broad market measure. But you have this really long bear market. And then you have a rally off the bear market. And this is kind of like where the Fed decides they're going to start normalizing rates. And so the market rallies. And right before the Fed starts raising rates, kind of the market starts discussing that or digesting that right around here. This is when the market pauses, right? We have this, right. This is from January up until November. So you have 11 months of consolidation here in 2003, 2004. Very, very well. in some ways similar to what you're having now, except the SPY is going up, but then other stocks are going down. But then once the Fed starts hiking rates, you sort of have this relief rally, and even though this is not a straight shot up, you have equities continue to rally into 2007, and we know bad things happened in 2008. Very similar dynamic. You have the Fed that lowers interest rates. Now the market is actually watching the Fed balance sheet, because the Fed balance sheet is the thing that's going to be determining tightening, the tightening of financial conditions. And so here the balance sheet is expanding. It stops expanding here. The market digests it and consolidates. And then similar kind of like dynamic here. You had obviously a European debt crisis in these episodes. But I think the main takeaway for me is whenever the market is really starting to digest a change in Fed policy, a more restrictive Fed policy, these consolidations are very typical. And they're just typically a pause before a resumption of the bull market. So I basically see the same thing here. We had a record amount of stimulus here in the balance sheet. Obviously, the market has made new highs. If you look at the SPY, we haven't really consolidated. It's continued to make new highs. If you look at something like the Russell 2000 or even the ARK ETFs or the high growth ETFs, those have sort of not only have they consolidated, they've made new lows, or they've declined pretty precipitously. But in kind of like the way I'm looking at things, or what I'm looking at as an analogy to previous cycles, is what's happening right now is just a digestion of a change in Fed policy. And probably sometime in the first quarter, we'll get a resumption, and people stop freaking out about what's going on.
It's almost like the worry about the Fed raising rates or the worry about the Fed tapering is worse than the actual event.
I think so. And, you obviously, so I guess the flip side of the argument is you have way too much debt today. You have an economy or a system maybe that's more dependent on stimulus, because the Fed balance sheet is just so much larger, right, than it was previously. So if the Fed raises rates and takes out some of that stimulus, that's going to have a much more amplified effect than historically. But from a business point of view, if you're running a business or in kind of the industrial sector, if rates are 0.25% or 0.5% on the margin, that's obviously more restrictive and more expensive to borrow money, but nothing in the realm of kind of like causing your, I'd say, spending or your ability to finance, unless economic conditions and unless financial conditions deteriorate and become much more restrictive. So I have to agree that everything you're saying makes sense. I guess the question really is like the Fed will inevitably raise rates and keep going until something breaks. And what I see in these charts is the fact that in the previous cycles, they were able to do quite a number of rate hikes before the market finally said enough is enough. The question I ask in my mind is this cycle around, is the market going to be able to take a 3 to 5% rate hike over a course of 2-3 years, or is it after only a few percent higher that the market will start to freak out? Like, do you have any thoughts, like in terms of what kind of magnitude this could go in this time around? Yeah, I wish I could predict the future. I'd say kind of the way to think about it, or there's a million different outcomes that could happen, and they all depend on sort of they're path dependent on a bunch of different things happening. But I would say that a couple of things. So on one end, I'd say the Fed will be pretty dovish and raise in a measured way. I'd say that's the central case, and the reason I say that's the central case is I do think that some of the inflation stuff that's going on right now is I don't want to use the word but I'll use it, is transitory. So I do think that they're it's sort
that
of
that word has been banned, buddy.
You can use it. It's because it makes sense.
It really is. You know what? I will use the word temporary. How about that? Or and I don't think we're in an inflation death spiral similar to the 70s. At the end of the day, I don't think anyone understands why inflation happens. And so that's I think another point to make is that I don't think anyone can explain really why inflation in the 70s was so high and was so persistent, and why we haven't had inflation in 20 years. Given all the money printing and all the stimulus we've had. But anyway, I think if you look at some of these commodities, they will be a great signal of where inflation is heading, and the fact that oil's consolidating, the fact that copper's consolidating. I think that's actually a really that supports the case that inflation is going to be more measured and is going to moderate next year once we start rounding and getting these base effects. So my central case is the Fed is going to be kind of dovish and more tempered in terms of raising rates. Now, if I'm wrong and inflation remains a problem, and they want to combat it with increasing rates, which I'm not sure is the right thing to do when it's a kind of supply side problem, then that's going to be a different scenario than my central case.
Yeah, I completely agree, Rob, that you don't fix a supply problem by, making people, tanking the economy, let's say.
Yeah.
Right?
Yeah.
Like that's in essence what we're doing. We're having problems with supply chain. We're having problems with things. So, how does tanking the economy help fix the supply? It doesn't.
What then you will have stagflation, which is kind of a growth declining, inflation staying high. But yeah, the Fed cannot fix the supply chain issues.
So one of the things that I thought was interesting was the fact that you alluded to after the great financial crisis, you needed to watch the balance sheet, the Fed's balance sheet, and you highlighted how we saw pauses and those coincided with pauses in the stock market. One of the interesting things is that we actually had a situation where we had quantitative tightening where it reduced. And even the quantitative tightening, we had a situation where the stock market could grind higher. And one of the things that I question is everyone thinks that the Fed has gotten so, let's just say, has made a hawkish tilt. But let's face it, the Fed is still expanding the balance sheet. This isn't a decline in the balance sheet. This is a reduction in the rate of expansion.
Yeah, that's exactly right. So I think there's like sort of two vectors here to think about. One vector is where are we on an absolute basis? Or on an absolute basis, are we sort of more accommodative or less accommodative than what the natural rate or what equilibrium should be? And given that the Fed is printing money and given that rates are near zero, we're definitely kind of like in one extreme, which is the accommodative extreme. And so the question is, where is the kind of the balance? And if the Fed is just doing some basic, some small quantitative tightening, where are we in that balance? And there is I don't know what that answer is. I don't know if there's a right answer. So the market has to figure that out. And then the second vector is, how fast is that changing? How fast are we going from very extreme to a little bit less extreme? And I think right now, the market's digesting the delta or the change of where we are on that spectrum. But you're absolutely right that even when the Fed starts tightening, or even when the Fed starts quantitatively tightening and increasing rates, we're still going to be at a really, really historically accommodative level for just relative to history.
Yeah, and Rob, to that point, part of the pushback in terms of financial historians that look back at the 2000 to let's say 2001 to 2006 period, part of the pushback that they say caused the real estate boom was the fact that the Fed said they were going to only tighten at a measured pace, meaning they would only do one hike per meeting. Mm-hmm. And a lot of people believe that really what we needed was the Fed to do 2, 3, or even more hikes to get caught up. If we have a situation where, let's just say, we do get some private sector credit growth next year, and we get some CapEx spending as companies, let's just say, reshore to North America, we could see a situation where there actually is a lot of economic activity, and the Fed would make the same mistake that they made in 2000 to 2001 to 2005 by not tightening quickly enough, because they probably will be reluctant to go more than once a meeting.
Yeah, I think that's that's kind of like reading the tea leaves of the Fed. I think kind of like following the 2-year in terms of what it's doing. like I would argue this is probably like we should fire everyone on the Fed and just have the 2-year tell us kind of like where Fed policy should be and follow that. But you sort of see kind of like that this kind of end of 2019 where the Fed continues to hike and the 2-year has started to decline already. And similarly, kind of here the 2 years sort of going sideways and the Fed continues to hike. I'm reminded of the ECB hiking in June of 2008, and our friend Trichet kind of like saying, "Look, inflation's high. I don't care what's going on." And that was like probably the biggest policy mistake. Or even
he did it again in 11, though,
and then he did it again in 11,
and then he did it twice.
And then remember in 2019, our friend JP kind of hiked at the end of 2018, and that was like
the long way from neutral when he decided to come and show everyone how tough he was, and then Warsh and Druckenmiller shamed him into lowering rates.
That's right, and so 3 months later, he was sort of like doing it in bad faith and stuff like that.
Yeah, and actually, I worry about that because it feels to me that when a new central bank leader takes the helm, they want to prove their inflation fighting chops. Yeah. And part of me is actually happy that we have Powell staying on, because even though everyone thought Brainerd was much more dovish, part of me worried that she might be, because everyone viewed her as so dovish, that she might actually end up being more hawkish than Powell will be being left in the seat.
Yeah, totally agree with that. I think JP kind of like has those scars and has that experience, and I think he has less to prove. I think
that's right. Plus, let's face it, this is a tough spot for the central bank, the head of the Federal Reserve. I have to give the guy all the credit in the world for sticking with it, because there's just no way he's either going to mess it up by having inflation, or he's going to mess it up by having a recession. It's ugly. This is going to be a very, very difficult kind of crowd to stick a handle out of.
Yeah, it's I have no, yeah, it's really, it's going to be really tough to get themselves out of the situation. Have no idea how to do it. But I do think that he thinks about the kind of like the two sides of the risk spectrum in terms of tightening too fast or not tightening fast enough. And I do think that in his heart, at his core, he thinks tightening too fast is worse than not tightening fast enough, and just like causing that spiral and basically withdrawing the accommodation too quickly.
Right. Can I put you on the spot? Can you give us a chart of copper versus gold?
Yeah.
Is that possible? And and then overlay it against the 10-year yield, or maybe the 30? That's one of, I think that's a Jeff Gunlack special. Other people did it before him, but it's one of his favorites.
So let's pull up.
Patrick, do you does your Crayola expertise allow this relationship?
Yes. Yep. But you need a thicker crayon for this one.
You need a thicker crayon.
What's the Crayola expertise?
Oh, what the Crayola expertise is. Patrick is a technical analysis, a technician, and it's a dark art, and he loves. They call him the Crayola eater, or the Lord of the Crayons.
You call me that, not they. Yeah. They. Who's they?
They do. There's even T-shirts made up for you.
By you.
No, Lena came up with the T-shirt.
All right.
Okay. So here we go.
So here's the copper versus gold ratio, and here's the 10-year. And so basically you're saying that these two are correlated like one for one.
It's shockingly good, isn't it? Are we able to use them on the same scale or no?
Yeah.
There we go. Yeah, so obviously there are periods. There you go. You can see how.
So this is 10 years. Yeah. So if you go like 20 years, I guess because of the scales, it gets a little bit
right.
Even here you can see that. But
the true mathematicians and statisticians they make fun of the dual axis.
Yes.
They like I've committed many
chart crimes
by this. But having said that, just make sure that you are aware of this, and it's more a discussion point than something you should be trading off of.
Yeah, it's kind of nuts that both markets are able to kind of process inflation and growth in a similar manner. What's the house view on gold here?
Patrick and I are
House
both,
of Pain.
we're both long and wrong. That's the house view of gold. How about you? Are you one of those fellows that believes that Warren Buffett was right when he said that it's a ridiculous commodity that we dig up out of the ground only to put back into the ground?
I think I don't have a strong view. I think the 10-year yield is going down as inflation and growth moderate. And so I would think this ratio is going down. That means gold is outperforming. I'm going to answer this a little more succinctly. Okay. I'm more bearish on gold than gun to my head, but not a strong view.
Okay. And can I ask why you think that we're going to get rates headed lower, bonds headed higher?
I think, so sort of like very similar to my analysis before of just looking at the cycle, and basically when the Fed. So let me just go 20 years. Basically, when the Fed starts hiking and this starts withdrawing growth from the system, this basically slows down growth and slows down inflation. The 10-year tends to stop, kind of either move sideways or down, and so you saw it kind of like here, maybe here. This is I don't know what you would call this, but I think this is going to be a big range that we're going to be in. And I don't think we're going to be breaking this range anytime soon.
So you expect the curve to flatten and from here as the Fed eventually raises rates?
I expect there to be a bull flattening, yeah.
Do you think that there's an inversion coming at some point?
It depends what the Fed policy. It depends what Fed policy is. So inversion will have to come from the fact that like the Fed's raising rates and they don't care what the long end is doing, but that's possible.
I've been shocked at how much the market has brought down the terminal rate of Fed funds. Meaning, if we look at it, more and more market participants believe that the Fed won't be able to raise rates very much before the economy rolls over, and that is part of the reason that we're seeing a flattening, and that it's also kind of consistent with your view that as they raise rates, things will dampen and we'll get no problems on the inflation front.
Yeah, I think I think this kind of like argument of this population shift that's happening in terms of relying more on fixed income, I think that's super valid. I think population growth is moderating, and the 10-year has historically tracked population growth. And so there is kind of like this more downward pressure on rates. And so I sort of buy into that. I think we're in a range. I'd be pretty surprised if it went above 2%, but this is kind of like what I'm looking at. And then as a play on that, one of the things that I love right now are the REITs. I think the REITs you win no matter what happens, because if rates go down, you sort of win because these trade on yields, and so if rates go sideways or go down, you win. And if the economy keeps expanding, there's a lot of fundamental tailwinds for these companies on the apartment side, on the office side, on the mall side to increase rents. And so I think, and you can see this chart is a pretty strong chart.
Bullish, yeah.
Can I push back on that a little?
Yeah, absolutely.
Sure. So I guess what some people might argue is if you had a steepening of the curve and the long end got hammered, and these REITs would, I'm assuming cap rates go with long end yields. I could be wrong, but I'm pretty sure that they're correlated to the long end. So if we had a situation where we saw, let's say, the front end was 1%, but the long end was 5%, then I suspect that the inflation component might not be enough to save you on the REIT side. Listen,
yeah.
To me, that's the way you lose, and I'm not sure that that's a very realistic scenario.
So absolutely. So if your view is that rates are going to 5%, and you have this, I think you do lose there. So if that actually happens, and so I guess given my view or my central view of what's going to happen in terms of rates being capped at like 2%, then that's going to be a pretty attractive place to be. Now, let's see. Historically, I'm trying to see here. I guess here you had a pretty major steepening, and REITs did okay.
It's just the REITs. The cap rate on I don't know what are the REITs kind of encompass a lot of different assets. So you have to say different things. But let's just say if you're looking at apartment buildings, the cap rates on these just keep going lower and lower. Even office office has probably had trouble because of the situation with the COVID. But like, let's just take apartment buildings. The cap rates are just so low. It's so difficult to buy that, assuming that the cap rate's going to go even lower.
Yeah, negative cap rates. I mean,
only makes sense.
It's going to be the infinity, right? Like,
no, but it's funny. We laugh, but we would have been laughing at negative interest rates a decade ago, right? Like or 2 decades ago. But
oh well. So REITs, you like REITs? I can't say I disagree, because I actually think that if you think about interest rates in real terms, I suspect they'll stay really low. And so even if we get a situation where rates go up, I suspect that it'll be only because inflation's going up even more. So in some ways, it's kind of like a tip. It's a real return bond because it's a real asset backing it as opposed to a nominal one.
Got it.
So so I'm kind of sympathetic. I kind of like it. It's shocking how cheap they got in the COVID crisis, right? Like nobody talks about these, but can you just quickly do the return percentage from the COVID low on this ETF?
Yeah, absolutely. So we could just go down here to the performance chart, and if we go to the COVID low,
March 23rd, 2020.
Yeah.
Oh, you know it.
March 23rd. 2020, boom. There you go. That is, so about 100%. And let's see, how's that compared?
And is that a total return or is that just a nominal?
That is the total return, yeah.
Yeah. So it's a double, and it's probably on a vol adjusted basis. It's probably a terrific return.
Much safer, probably way lower drawdowns.
I don't know. The S&P's been pretty safe for the last year.
It's like those FANGs are like T-bills. Speaking of FANGs, you wanted to chat a little bit about ARK and all the different components and pieces of the market. Rob, why don't you walk us through what you're watching there?
Yeah, just I love watching these ARK ETFs, and one of the things that I'll look at is just looking at the ARK Innovation ETF, which is one of the largest ones, and just looking at the market cap versus the percentage drawdown from the 52-week high, and just seeing where those stocks are, and just seeing kind of like where some of these stocks are since the high. But our friend Tesla, man, that is one that I do not like. If 3 months ago I told you we're going to have the worst growth sell-off we've had in a decade, and the positioning flush, and everything that's a story stock just goes down 80%. I mean, and you said, hey, Tesla's going to be sort of flattish in that environment, or down 20%. Like I do not understand the market here. I would say that the market is telling you something here, but this is like one of the most surprising charts to me.
The fact that it hasn't had a flush with the rest of the ARK kind of names, the fact that that's hung in there, and so what do you think? Do you think that it's the last one they shoot, or do you think it's telling you that Elon really is the genius and this thing's headed a lot higher?
I think it's heading a lot higher. Well, my guess would be the market's telling you it's headed a lot higher, I'm not someone who understands this stock. Like I don't understand kind of like I'm not like a Uber Tesla bull. But looking at this chart and looking at just like this breakout and the ability to hold this gap and not trade below it, and in an environment where if I look at IWF, which is the which is this is the Russell 1000. Sorry, if I look at the ARC ETF, and the drawdown here is going to be
Poor Kathy's had some trouble.
So 26% at the low, sort of 23% down. And this is trading sideways. This is not like following this at all. And I would have guessed that Tesla would be the funding source for a lot of these for this positioning flush.
Well, I think it was the funding source for Kathy's position flush, but it's hung in there, and someone else has bought it.
Yeah.
And what's amazing is that this was done. Kathy was selling, and not only that, Elon was selling at the same time.
Right. And
the market ate it.
And the market ate it. And I guess the other stock that maybe you could look at, which looks super bullish and also transitioning to an electric company, is Ford. Right. So maybe the market's just saying like over the next 10 years, you're basically going to replace every diesel car or gas car with an electric car. And this is kind of like what's being pressed in. I don't know. Something's going on here.
I'm a big bull on both Ford and GM. I think the valuations for their electric and their autonomous driving are way undervalued versus the public market prices for the specialized company. And I suspect that 2022 will be the year that the market starts to figure out that, and those sorts of things, those valuation gaps narrow.
Yeah, but are you playing it as a long short, or are you like where you're carrying that? Because like it's a pretty bold call just to be outright long them, isn't it?
No, I think you could buy both of those. I'm with. Listen, I have a little bit of trouble with Rob's Tesla view, but I respect I respect the call, because it is very lonely to stand up and say I'm a Tesla bull. I think it's behaving well, and it takes guts to say that. So I respect that call, but I have to agree. Ford and GM, their charts look good.
This is one of the most bullish charts I've ever seen. I mean, like what does this say? 20-year sideways. And just broke out of basically a 20-year sideways pattern. Like that's insane.
So I don't mind owning those, Patrick. I know that's weird because
listen, good luck.
Patrick does not like it.
No, I don't want to say I don't like it. I'm not in it, but it's not. I don't hate it. I'm just saying good luck. I hope it works out for you.
Yeah, I'm on the other side of the Tesla. I kind of feel Tesla's hanging in there. It's the last one. It's getting hung up. It's staying bid with all the other FANGs, and I suspect it's moving a lot with Apple, Microsoft, NVIDIA, and Amazon. Like I have a feeling that group is moving together more, and I am a believer that trade comes off in 2022, and so I suspect that Tesla is a lot lower, but that's what makes a market.
You know what the problem I always have is like everyone's like talking about that narrative that electric cars, everything's going to get replaced. So there's got to be someone that's pumping all these new electric cars out. But I mean, they're just going to stop making combustion engines and replacing with the electric ones. But it doesn't change that the automotive space is saturated and commoditized, and essentially they want market share over profit. And the thing is that they're going to be fighting for market share, and they're going to do it at the expense of profit, and no one's going to freaking make money. And everyone's paying these top premiums thinking that they're going to make shitloads of money on it. And in the end, these companies are just going to be the same old car companies a decade from now that they always were.
Yeah, but listen, that's the circle of life,
so
Patrick.
You're drinking
you...
Kool-Aid. You're just drinking the magic Kool-Aid.
But I just think where you are in the cycle matters. And I just think that we're in the part of the cycle that
everyone's willing to pay up a premium on.
Listen, I'm short. I'm on the other side of Rob's trade. I think Tesla's headed a lot lower, but I've been thinking that for a while, and I've been an idiot. I will say this, Rob, that Patrick and I, although we didn't get long, and I might have even been short for little periods, we've been noticing, what was it, a month ago, 2 months ago, before the big move in Tesla to the upside, it was creeping higher, and we kept saying, look, stock market's going nowhere. This thing's creeping higher. It feels to me like that's what GM and Ford are doing.
Yeah, and I would say, Patrick, you're absolutely right that this industry has been a shit industry for 20 or 30 years, and that's why this is kind of the chart was moving sideways. But you're paying you're paying 10 times for this company, right? You're paying so it's priced to be a shitty company. And if for some reason electric vehicles are higher margin or they require less less capital intensive, I don't know what the thesis is, but if that turns out to be the case, then you have a lot of valuation upside.
It just needs to be less shitty.
Goes from being really shitty to just less shitty.
Yeah.
I can't remember who said that, but there's some trader or portfolio manager that said there's a lot of money to be made from finding a really shitty company that becomes less shitty.
Yeah. Sorry, guys.
You know what would be an interesting chart to pull up is looking at the Russell versus the NASDAQ. And what's interesting is that while the market did rebound and we did have this, whether it was an options-driven, Vanna tailwind or whatever we want to look at it, bottom line is the breadth of the market has not been rebounding in any extraordinary way. And while the S&P is back towards its 52-week highs and the NASDAQ is working its way higher, the Russell and a lot of the broader stocks in the market continue to dog it a bit. And we're in that same scenario where these mega cap stocks continue to just be the story, right?
Yeah, absolutely. So if you kind of look at Russell 2000 versus QQQ, you definitely see it. If you look at Russell 2000 IWM versus OEF, which is the S&P 100, kind of the mega caps, you see it as well. This huge underperformance. So there's definitely a rotation from small cap to large cap.
They tricked us into thinking that it was going to start to do better this year. They teased us, and then it's just been just a disappointment for the last second, kind of the last quarter, right? Like it's just being crushed.
Yeah, I would say kind of if I look at this longer term chart of S&P 500 versus Russell 2000. I mean, this is I don't know. What would you say about this chart with your crayon?
Well, I mean, you can see that during the different economic cycles, the different parts of the market outperform others, right? But what's interesting in my mind is that we did go through in that 2018 to 2020 period where it was explosive rallying in those mega caps.
Yeah.
Then there was obviously this little period here where everyone, the reopening trade basically kind of collapsed this whole thing. But here we are again in that same trend that was in place for 2018-19 period. It seems to be right back in play. And, I've heard some of these bearish arguments on shows that won't be named, but the thing is that right now it doesn't seem like anything has changed. Right now, everything that seems to have been working in the last couple of months is just more of the same in some degree or another.
Oh, Patrick, I'll take the other side of that.
Really? Go for it.
Well, first of all, if you look over the long time, small caps outperform large caps. They're riskier, but they outperform. And this is the period of I don't know the exact things. I'm probably getting it wrong. But I believe that large caps have outperformed in the largest manner that we've had in decades.
Absolutely, but my only point is that we're just getting more of the same right now.
I know this is the final. I hope I don't go through this. This is the final. Just get me into these trades because everybody is scared. People got worried.
So you're calling the end of this trade right here.
I am.
The start of 2022.
Yep.
All right. So you're like it's the Fang's turn to dog.
Yeah, 100%. 2022 at the end of next year when we're having Rob.
Well, look, I don't really want to
charts.
Yeah.
We will not be talking about how Fangs were yet another year of outperformance and how they did it and everything was great. And listen, I am going to get so many people tell me that I'm wrong. And what you don't understand is that the more you guys tell me I'm wrong, it's like the more convinced I'm right. Because you're like the fucking emperor in Star Wars. Let the hate flow through you. Yes, but having said that, It's so overowned, and it's been forever that this trade has worked. And the longer it goes on, the more everyone becomes overweight, the more susceptible it becomes to a correction.
Oh, listen, I feel for you, buddy, because like no, because I actually in principle agree with you. I just feel like this is like your 2018 inflation call that you're just too early. You're going to be right. Like if you go over a long enough time frame and you go out, let's say 3 to 5 years, there's going to 100% be what you're talking about is going to occur. I'm just not sure it's going to start at the beginning of the year. You just might be early again to this kind of a call, but I at some point you're going to be right. I'm going to give you that.
If I just stick with it long enough, eventually I'll be right.
Yeah,
kind of like the ZH Doom Bears, like that. They just stay bearish the whole time, and then eventually, when they get
eventually, it's like a broken clock being right twice a day. As long as you keep saying it over and over again,
10%. I'm right.
That's
all right. Let's let Rob settle this, and by maybe figuring out something else to talk about. What else you got planned for us here in terms of charts that we're going to look at?
No, this is.
Rob likes us fighting. He's like,
You know what? Let's put up the yield curves. Actually, I love the fact that you have this built into Koyfin, and it's amazing just how non-responsive that, like you were talking about earlier, but that long end of the curve is just not having anything to do with this inflation, and as everyone's pricing in these higher Fed interest rates at the short end of the curve, it's just flattening straight across the board, and it's like, and I'm in the back of my mind, I just keep asking the question: are we going for an inversion here? Like it's. Like, I don't know if I want him bold enough to make that call, but I'm certainly thinking it. Like, Kev, do you think we're going to invert?
No, I think it's completely wrong. But listen, I get it, and maybe I'm.
What, did you already start loading up on your 530s?
Loading is a kind of is a charged word, but.
You're dabbling. Are you dabbling?
It is going against me, so I don't just stand in there and I'll buy another 5 lot. I'm not going to stop the market or anything with my size, but no, I listen. I'm sympathetic to Rob's view. I understand Rob's view. I still think that that we're going to have a stronger economy on the other side, and that it's going to surprise people. And so far, I'm wrong. And Rob's right. And whenever the market does something that you're not expecting, you have to make sure that you know what's going on, and you really understand where the other person that's taking the other side of your trade is wrong. And it's pretty arrogant of me to sit here and say, I saw Rick Reeder from BlackRock talk about this, and he said this basically the same thing as Rob. So I'm going up against one of the kind of largest money managers that has at his disposal tons and tons of research, and not only that, is been doing this a lot longer than me and more kind of dedicated than me, and he thinks the complete opposite. So I listen. So it's not like I'm sitting here and saying for sure he's wrong, but I do believe that there's a chance that the market is underappreciating the private sector credit creation that's going to happen in 2022.
There you go.
Yeah.
Well,
should we have kind of like one trade each and compare that next time we talk Koyfin charts?
Sure.
Yeah.
Yeah.
Damn.
Okay. So I love it, Rob. You're coming up with stuff. So you got yours already?
Do I have mine? Yeah.
You start.
I start. Okay.
And you got to give us a time frame that we're doing, and then Patrick and I will think up on the fly.
Cool. So I think just as we're talking about it, so I think we are probably at some point like 6 to 12 months from now, right? It's sort of like spring to maybe mid. Let's aim for spring of next, or like June of next year. How's that?
Okay. Yes, you come back in the summer.
I'm going to come back in the summer.
Okay. So let's pick. Why don't we pick? Let's do the July 4th, whatever that is.
July 4th weekend?
Yeah, like
July
whatever
4th,
it is,
right?
hard July 1st. And so we're aiming for that.
Cool. Okay. Okay. I don't want to steal. I don't want to steal Ford from you.
No, I know. I might not pick Ford. You go ahead and pick whatever you like.
Cool.
You're the guest. You pick.
Cool. You know what? I'm going to go with Ford.
Okay. What are you saying? Like, are you going to just say we're supposed to pick something that we like best, or are we going to make a prediction?
I think pick something like on a return basis, like we could actually measure it. So when we go back here and we put in like Ford and some stock or ETF, I guess like you can't pick a fixed income trade. That'd be kind of hard to measure. So
right. Okay. So we're picking one stock. Okay. Patrick.
Or ETF.
So Patrick, you want to go ahead or should I?
You know what? I'm gonna call a rebound on the oil refiners.
Okay,
but I'm gonna do it on the ETF. Let's use the crack ETF, CRAK.
Cool.
Patrick is sophisticated.
Wow, ETF. There we go.
Yeah, like I just, you know what? I think that it was unnecessarily beaten up here, and I think I'm gonna play the value play on buying the dip here.
Now, am I allowed to pick a short?
Yeah, if you think that's going to be the highest total return from now until July.
I'm going to have to fade you, Rob. I'm going to short Tesla.
Oh, boy. Okay. There we go.
Oh, my God. There we go.
Wow. Okay.
I chose the crack cocaine of the trades.
Yeah, exactly.
I'm either going to look like a complete and utter fool or win it.
The
highest fall. Actually, if you really wanted to be gutsy, you could go for the asset that shall not be named.
Oh, there you go. Got it. Rhymes with Moyne.
Yeah.
Well.
All right.
Anyway.
So, why don't do you have while we're chatting about Koyfin charts and how's it going in terms of the programming and everything from that basis? Do you have anything new that you've rolled out recently?
Yeah. So. Recently, we basically, I forgot the last time I was on the show, but did I show you guys market news? Was that?
No, I don't think so.
No, go for it.
Oh, cool. So we rolled out something called market news. So now on the top feature, we have all these awesome sources from Reuters. So now if you wanted to look at kind of like the what's happening in the Americas or whatever, you could just click on that and you get these Reuters stories, which are great. And then for our macro friends, we have all these macro sections. And then in the next 2 weeks, we're going to allow you to create your own tab with your own topics. So if you wanted to search for a topic or create your own topic, you could do that as well. But this is something that's really useful to get this to Reuters News on Koyfin.
You know, I have to say, like, I mean, we've said it so many times before, but it's just such an amazing resource. All the big pros are using obviously Bloomberg's, but the average retail investor isn't able to fork out the kind of money that needed to run a Bloomberg, and just having one place to go to get all of these amazing resources. It's such a valuable tool. And it's so amazing that you put this together, bud.
Cool. Thanks so much. It's been a lot of hard work, but it's been great to see it come together, and I really appreciate all your support and helping us spread the good word about it.
So, Patrick, you were saying all the pros are still using Bloomberg, but not for long, right?
There you
right,
go.
Rob. We're gonna have them using Koyfin before long if we keep this up.
If we have something to do with it, absolutely.
You know what you should do? You should get yourself some messaging as well, because that ends up being an important thing for the Bloomberg, is that the ability to talk with other users.
Yeah, so we've thought about that, and I think we want to basically get a little bit more of a critical mass in terms of our audience.
Right. But it's on the list. I can imagine what your list looks like.
It's a long list. If you actually go here under feedback, you could see this list because we have all the feature requests here that you could go through.
What do you use, if I may ask from a personal standpoint? You're a business owner that's listening to a lot of different people, and you have many different constituencies talking to you. What sort of software do you use to organize and keep track of all this? Do you have something that any tips for us?
Yeah. So internally, we sort of have a list of features that we're thinking about that users are asking about, and the way we think about it is sort of like 3 levels, and we grade them according to certain criteria. But level number 1 are things that people ask for that we sort of know with high certainty that are going to work, and we just have to build them.
Yeah.
So that would be an example of, if I go under here and I think about feedback, it would be a screening tool. Like, that's the number 1 thing. So we are going to build that in the first quarter, or get ownership information. So a lot of the stuff is just like our users are asking us for it, and we just have to build it.
Right.
Level number 2 is stuff that we think is going to have higher impact, but it's going to be higher risk and more work. So an example of that would be integrating Koyfin with trading and crypto, and stuff that's a little bit more out there, and we have to be a little bit more creative and spend more resources, which we're going to do as well. And the third level is something that is kind of like a little bit more like a moonshot, or something that is sort of half-baked. An example of that would be like messaging, or having social features on Koyfin where you can debate and discuss stocks. And I've been thinking about having kind of like a Wikipedia aspect to Koyfin where users can go and edit different like stock theses, like the bull case and the bear case for Tesla, and then you have kind of like a dialogue on here with charts and text and stuff like that. So and what we do to organize all that is we use a program called ClickUp. And so
I know it. Yeah. So you enjoy it. You think that's a great, like that was does what you want, and you find it was the best solution?
ClickUp is super. It's very customizable. It's pretty advanced, so you have to sort of learn how to use it. But it's very flexible, and we use ClickUp for all our organization, from kind of organizing the teams and task management and product management. So we use ClickUp for a lot of stuff.
That's fascinating. Rob, I don't know what it says that you meant. You mentioned my idea about social, and then I love the Wikipedia idea. And all the things that I like are in the half-baked category.
Of course they are, Mr. Crack. No, that's the
right. Well, I am Canadian.
That's the other one.
That's Canadian. The only part that's wrong is the half part there for most Canadians. Anyways, Rob, so why don't you tell people a little bit about where they can find you, or they can find more about Koyfin and how it all works?
Cool. Yeah, absolutely. So Koyfin, web-based application, just go on koyfin.com. You can create a free account. We have a ton of users on the free plan. And then we have 3 paid plans that'll give you more functionality and more data. So if you go to Koyfin pricing, you'll be able to see that. So this basic plan that we rolled out recently is $15 a month, super affordable. You get the news that I mentioned before. You get 8 watch lists, 8 dashboards, 8 chart templates, 5 years of financial statements, plus all the stuff in free. And then we have some kind of like higher packages if you want to use Koyfin in a more advanced way. But this is where you can find it and pay for it.
Well, Rob, it's always a pleasure having you. We wish you all the best, as Patrick and I have both said.
Happy holidays to you and your family, too.
That's right. Happy holidays to everyone at Koyfin, not just you and your family. We wish you all the best with your product. We definitely think that that other big name, let's just call them the black and orange places, need some competition. And so we're always rooting for you, and it's easy to root for such nice people. And so thank you very much for everything, and best of luck to you guys, and happy holidays.
Thank you so much. Happy holidays. Wishing you and your families a great year ahead, and thanks to you for all your support.
All right. Take care, Rob. Thanks a lot, buddy.
All right, Patrick, it's time for Skin in the Game.
You got me, buddy. You got me. It stings. It stings. Like, you know what? Like, I just can't. You know what? Look, I know there's supply chain things and all this stuff. I just can't believe it's printing month after month at these higher elevated levels. Like, I'm not saying that we should be seeing deflation, but like I'm surprised that there's keeping up at these kind of high.
So Patrick, you didn't tell people what the bet was. The bet was ultimately we were betting on the CPI print, and my kind of assertion was that the CPI print was going to end up being higher than expectations. Not higher than the previous one, higher than expectations. And yet again, it did. There was too many people like Patrick that assumed that inflation was going to tick lower, and yet it didn't.
Well, interesting that you chose the number 69.
No, I didn't choose that. That was
the consensus 69. I don't know. I don't think it's a coincidence.
You think I'm like Elon Musk and just giggling like a little schoolboy every time the 620,
I am
the
giggling.
420 or 69 comes up?
That's me.
I'm going to tweet about it. What an idiot. Okay, let me tell everyone about Skin in the Game. Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode, and the currency for the wagers is as follows. Oh, by the way, what did I win last week?
Wasn't it a pitcher for the?
I think it was. I think it was for the piss up. It was a pitcher. It starts at a Duke and Duke, which is a crisp $1 American bill, although we are allowing Canadian if they're bills and not loonies. Pint of beer is the next, burger bet, and then it goes up to a pitcher. A case of beer, which affectionately known here in Canada as a 2-4. Bottle of wine, Patrick is nixed. The boxes of wine, they're not allowed anymore. Steak dinner is the big kahuna. The winner of the bet is obligated to create a new bet for the following week. All wagers settle in full, and there will be no netting of positions. Okay.
Now, listen, I just want to make this clear. I'm not totally opposed to boxed wine, but what was really bad was that you made it a white wine. Like who does that?
Okay,
like
so
you came over for a steak dinner, and you bring a boxed wine, white wine.
Well,
who does that?
I should have brought the cougar juice for Lena.
Hey now.
Hey, listen, I hope Darius Dale can come to our piss up and we'll get him a nice fine rosé. He loves the rosé, although I think there's some seasonality to it. Am I right?
Oh, I don't know.
Well,
I think there is. I think Darius is a listener, so he'll let us know.
He'll have to let us know, yeah.
Yeah, I believe there's some seasonality to it. He does not drink it in the winter months. And I don't know how he feels about boxed rosé. We'll have to. So 2 questions for Darius. Most people want to know all about what's happening to the markets and what his outlook.
This is what we want to know.
We don't care about that. We just want to know 2 questions. 1, will he drink rosé during winter months? And 2, what does he feel about boxed rosé? Okay, all right, now let's get on to the bet. Can you pull up the S&P cash index?
The cash index, okay.
Yeah, the cash index. What we're going to bet on, Patrick, we're going to bet on expiry. I like betting on expiry. So the OPEX expiry is Friday morning's expiry. Right now, we went out at what was that level? My old
47.12.
47.12. Okay. So what we're going to do is we're going to bet on plus, above or below on expiry, and the expiry is the morning, not the evening. 47.12. Let me just do my math here. I want to figure out where I want to be. It's tempting. I got 47.12 on expiry. Oh man. No, I can't.
Yeah. What? This is funny. You thought you had a bet. Now you're like talking yourself out of it. It's
wow. Okay, so we're gonna do this. I'm gonna do 47.12. We're gonna do 4,900 above or below.
Whoa! 4,900 on the S&P.
Well, no. 1 second, because that's expiry. It's not a one touch, is it? I gotta think this through. I gotta make sure I gotta just think. Because I know you're gonna be bullish and. Okay, we're going to do 40, because I want to, oh man, Patrick, you're making my life tough. Okay.
You're just scared.
I am scared. I'm scared.
Because you're well, we haven't even made the bet. It could be a Duke and Duke, and you just have a little, what, you're going to lose a dollar bill. Come on. Let's make a bet.
I'm sticking with it. I'm going to do 48.50 on expiry.
One touch
up or down? No, up or down. You pick it.
No, I'm going to say down.
Okay, I take 48.50, and I like the reality is I'm not going to do a huge amount because I've already built myself into. It's got to rally a lot going into this, but I am bullish. I think it is headed a lot higher.
All right, so
do a picture for the.
All right, done.
Yeah. I know that's not really the best bet for me. I haven't really done that very well in terms of my poker playing, but I really feel like we're headed higher. I feel like we're going to expire much higher. It's going to get pulled up with all the expiry. I actually think there's a chance we're significantly higher on expiry.
All right, let's see how this plays out. Okay, so what's the bet?
A pitcher.
Okay, there we go. So let's go on to the no stupid questions, only stupid answers, and this is where Lena gets to come on and pitch.
There's quite a few this week.
So we're going to make them quick.
That's right.
Quick answers.
The first one.
Patrick's he's already given me the pep talk.
Okay. The first one, help a retail dummy out here. On Friday, December 3rd, when the VIX was trading between 34 and 35, I bought Jan 1935 strike puts for $10.50 each. As of writing this, the VIX has fallen from 34.35 to around 22. My options have gone from 10.50 to about 12.80, about 20% gain in spite of the VIX falling almost 35% in that time frame. What gives? P.S. If you're looking for your next beer, try some Propeller Stone Fruit from Halifax, Nova Scotia.
You know, you gotta love the Easterners. They're just wonderful people. They shouldn't be trading VIX though. No, I'm just kidding. We're gonna teach you what's happening there. The VIX future is how you have to price the options, because these options are European exercise, meaning that you cannot exercise them early. And they are only exercisable at expiry. I'm right there, right? I'm pretty sure I'm right there. So what this means is that the shape of the VIX curve is very important. So when you're looking at the underlying VIX, you think that when you're trading the options, that you're trading that VIX, like the actual cash index. But there's no way for you to buy the actual cash VIX index. So what it ends up being is the futures expire into the same level as the options, meaning that those futures will be cash settled on the same expiry as the options. So therefore, in essence, the options are options on the futures, and that's how they hedge them. So in this case, it was the fact was the VIX might have been 35, but if you looked at the January future, I don't know it at the time, and I'm not in front of the computer, but I'll suspect that it was probably 30 or 29 or something.
It was probably even lower.
Yeah,
it's in the mid 20s,
and it's now gone down to whatever it is, and that's why.
But you can just tell by the option price, $10.50 for the put. It had to have a huge intrinsic value,
right?
I mean, that's
so the answer to your question is: be aware that when you're trading the VIX options, you are not trading the VIX spot. You're trading it against VIX futures, and that is what you should be pricing it off of.
All right, Lena, number two.
Number two. Hi, guys. Love your show. Thank you for making it so funny and informative at the same time. To be honest, I feel jealous of Kevin's sense of humor and Patrick's patience.
What patience?
He's got to be patient with me.
Okay, there you go.
Now, please answer my question so I hopefully can make more money. Managing my portfolio, I follow a pretty simple strategy. Depending on market outlook or trends, I like to build my positions using options and collecting premiums by writing puts and then, if have been assigned, writing calls.
Okay, by the way, but Lena, just stop there. So just so people know that's called the wheel strategy. And there's a name for doing that. It's the rotation between put selling and then cover call writing on assignment. But anyway, go on, finish the question.
As a result, a time frame for a position can vary from short to long term. Recently, I've realized I want to add some volatility to my portfolio to diversify and collect premiums. What would be a recommendation for an instrument and strategy in general? Please don't hesitate to tell if it's a stupid idea or approach. P.S. Can't wait for the market huddle piss up.
Oh, there you go.
This one's yours, Patrick. I didn't even know about the wheel strategy, so this is all your wheel.
Yeah, it's one of the ways to do the premium harvesting, which is exactly what he's trying to do. And the key is there's nothing wrong with going to higher vol ideas and different instruments to do so, but the key is to try to get a good basket of uncorrelated assets that you're doing it on, because one of the pitfalls of covered call writing is you think you're diversified justified by owning, let's say, a basket of stocks, and you end up just having all things that are correlated. And then when the market ends up having an event, all your stocks are going down at the same time. And so while having higher volatile assets in there to juice up the premium is fine, you also want to make sure that you're just not buying different versions of the same correlation, right? And I think that's the key to that is that you want to have that diversified basket.
There we go. Next one. We're gonna get 6 done.
All right.
First, when I was in engineering school and my professor said there were no stupid questions, I always answered, "You haven't heard mine yet." Same thing applies here. Second, I love Patrick's geekiness. Thanks to him, I made a tidy profit in rare earth metals, so no one should ever make fun of him for paying attention to things like that.
So 1 second, can I interrupt here? Patrick is geeky and patient. The patient geek.
These people obviously haven't listened to all our episodes. Okay, so third, my 2 stupid questions. 1, I've been constructing a Chris Cole Dragon-ish portfolio, which allocates about 20% to each of bonds and volatility. Part of that includes tail, which is high 90% bonds and a tiny percent volatility. I read a post somewhere by a FIRE community person who described 100% of their tail allocation as volatility, but I allocated as high 90% bonds and a tiny percent volatility. I asked this because putting 20% in volatility is kind of crazy expensive anyway. Is that guy right, or am I? Do you want me to read the rest of the question?
Yeah, do all of it, and then Patrick's going to handle all this one. This one's all in Patrick's wheelhouse again.
2, in a Dragon portfolio, how would you categorize a fixed annuity with a guaranteed lifetime income stream?
All right. Well, the just to answer the long vol strategy component, and I think that a lot of people mix up that when these different long vol asset managers are buying volatility and they say a percentage allocation, they're not talking about putting all of the money in that allocation to work, because it's often using derivative products to achieve a targeted weighting. And so a lot of times when you're doing option strategies or using futures or anything else like that, you're able to attain very large amounts of notional exposure with a very small amount of money. So an example of this tail ETF that our listeners are referring to, while this tail ETF has 90% invested into treasury bonds, it's because 10% weighted into the options, into those put options, is all that's needed to get the targeted notional exposure to the downside of the market. And so, I'm almost certain that Chris Cole was not intending that the 20% of the entire portfolio is all juiced up, fully invested into highly leveraged vol products. And so using things like the tail product is a reasonable way and a simple way to achieve it, outside of building your own straddles and other types of long vol strategies. And otherwise, like Kev, I don't know if you agree, but like a fixed annuity is definitely a part of an income stream, or the income component of a Dragon portfolio in my mind. I don't see any reason why that shouldn't be in there. Do you have anything to add to that, or is that good?
I'm just kind of confused about the whole Dragon thing, because I just keep thinking Game of Thrones.
All right. Okay. Let's just go on.
I'm just not a Dragon guy. I don't know. I haven't spent enough time. I know that it's something that you have spoken about in your courses and with your members, and it's something that you feel passionately about. So I'm leaving that completely in your camp.
All right. So Lena, next.
All right. Hi, guys. Thank you for the great show. I'd like to express the view that too many Fed rate hikes are priced in for 2022. What is the best instrument to do that? Fed funds futures seem to be the quote-unquote purest play, but the liquidity is really low, so risk management is a challenge. Eurodollars are very liquid, but they incorporate a spread to the Fed funds rate, a spread that has blown out of 50 basis points plus each time there is an offshore US dollar shortage, 2010 and 2012 euro crisis, or more recently in April 2020. So it seems dangerous to stay long for a long period of time. Thanks for your help.
So this is a great question, and I like the strategy a lot, Patrick, because I do believe that more than likely that the market has priced in too many rate hikes for 2022, and The listener has correctly identified the different ways that you can go about doing this, and I wish I had an answer, but he's right about both of these. Yes, Fed funds is the most pure way to do it. Yes, it is less liquid. I personally don't have a problem with the slightly less liquid product because I'm not tossing around, 10,000 lots and of these futures, so it's not really a big deal for me. But if you really wanted to, the euro dollars are more liquid than the Fed funds, and you just have to live with the risk that what's known as the TED spread, the treasuries, which in essence what Fed funds is, because it's a riskless security or asset, the TED spread, the treasuries versus euro dollars blow out. It's actually even made even more complicated by the fact that we're slowly transitioning out LIBOR and that we're moving to another index. And so I would still say I wouldn't worry if I was this listener, I wouldn't worry about the credit portion of it, and I would just trade the euro dollars because they are plenty liquid enough. Or sorry, not liquid enough. They are the spread is plenty stable enough, and it can blow out, but the reality is that it doesn't that often, and it probably won't over the short run like that. But the long and short of it is, Patrick, he's answered his own question, and you either give up liquidity or you accept the risk of the credit portion, and that's it. Next question. Sorry, I stumbled on that one.
Hi, Patrick and Kevin. I am a big fan of Market Huddle and never miss an episode. I find talking charts particularly interesting.
Another Crayola eater.
Yeah, I feel like Patrick just picked all these questions.
Yeah, he did.
Today, I have the following question. I've been selling naked calls, SPY, for about a year and noticed in my IB account that I have to pay, quote unquote, dividend payments in lieu. Is this correct? Since I actually entered a short position, I also have to pay the dividend. That would mean I have to buy back the call before the X date. But how is it if I sell naked puts from SPY, what I did 2 days ago? Does the dividend have any influence here? This would actually be a long position? What happens with the dividend here at the X date? Thanks a lot for your great work and your fast answer, because the next ex-dividend date for SPY will be soon, approximately December 17th. Greetings from Switzerland.
Well, Kev, as far as I'm aware, that is not factually correct, because the only risk is that if you're in the money on a short call and they do the exercise, because it's American style option with SPY, that you're assigned prior to the ex-dividend date, then you would be on the hook for that. But dividends are discounted into the options at their original pricing. So the idea that that has to be paid an extra is not jive with my understanding of
Well, I just realized, Patrick, when I was thinking about this, that when you exercise a call, it's not for 2-day settlement, right? It's next day. And so therefore, the ex-dividend date is based upon trade date settlement, meaning that it's using 2 days. And the reality is that when you exercise, it's only 1 day, if I remember everything correctly. The long and short of it is that the markets are efficient, especially on this. And the way, if they're not efficient, it's that too many people aren't aware of this and therefore don't exercise when they should be, or are short when they shouldn't be. And there is no way that you are getting charged a dividend if you're not getting exercised on the call. And so what's happening
that's my understanding.
Right. Yeah. Like what's happening is that in essence, they're exercising it on you, and they're doing it at the most advantageous time. And I do believe that there is a lot of professional option traders that will attempt to do this trade because they know not everyone, let's just say, exercises properly. So sometimes they'll actually be short, assuming that not everyone exercises when they should be. Because if you look at the theory on option pricing based upon American style exercise, there's times that it's actually worth it to exercise as opposed to keep the option for the extra days. And that's in essence what's happening. The long and short of it is you're getting arbed by the professionals that are taking advantage of that mispricing, and look into it a little bit more. And I do believe that IB has something in there that will help you determine if you should exercise early or not.
All right. Next question.
Hi, Kevin, Lena, and Squirrel Killer. I've got 2 quick questions I'd like
I'll
your
never live it
opinion
down.
on.
I'll never live it down.
Firstly, I've been thinking about how everybody says the Fed is trapped reinflation and raising rates, etc. But what if they're figured out? But what if they figured out that they can use new COVID variants to quell consumer demand? Obviously, they can't shut down industry again as this causes supply constraints. But if they cause just enough consumer demand and market restraint, couldn't this work for a while? Also, regarding the asset that shall not be named, with the market being 24/7, I wonder what effect drunk trading has on the price. I'm not talking about kids with a couple of dollars buying Doge on a Saturday night, but proper Wall Street king of the world types trading large private accounts. I can't be the only one who's made some reckless and surprisingly successful trades after a few beers, and I definitely haven't put on a trade and forgotten I even put it on after a Friday afternoon catch up with friends. Anyway, great show.
So there definitely is drunk trading going on. I can't remember. Was it Brent Donnelly that talked about foreign exchange and how it was a 24-hour market and that used to be they would go and trade currencies a little bit after the pub? It was one of them. If it wasn't Brent Donnelly, we've definitely had this. So It's not just crypto that we have drunk trading out there. And as a guy that was on an institutional trading desk and saw some salesmen and traders go out for lunch and come back and trade in the afternoon, it is nothing new. Now, what do you want to tell you about the Fed? What are we going to talk about there? I don't think the Fed is trapped. I definitely think that people are assigning too much power to the Fed to control the supply chain. We discussed this briefly earlier, but I think that any time that people start to assign, have all these helicopter tinfoil hat type theories about the Fed and what's happening and all how they're trapped and how they might do X, Y, and Z. They're assigning a level of sophistication and nefariousness to the Fed and government officials that doesn't exist. I'm a big believer in Hanlon's razor. That the Hanlon's razor states never explain something that can be never assume it's something nefarious that can be explained through stupidity or something to that effect. And I'm a big believer in that.
All right. Okay, Lena, where can people submit their questions?
If you like the answers you've heard on this episode, please send your questions to nostupidquestions@markethuddle.com.
All right. Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle on Twitter. We're there every day. Lena's pimping the merch on there, and please help her out there. And she does get tired of talking to Patrick and myself. You can listen to the Market Huddle on all the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts and visuals. And while you're there, please like and subscribe to get our latest content. And if you could, please rate and review us on iTunes. It's a dumb game, but it makes a difference to Apple's algorithm and helps us out immensely. Patrick, where can they find you?
You can find me on Twitter at Patrick Ceresna or follow me at bigpicturetrading.com. Kev, where can they follow you?
They can go check me out at Kevin Muir on Twitter, or you can go have a look at my letter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. So thanks for tuning in, and now stick around for the after show.
All right. That was a good show.
Okay, so we got to do this beer.
Yeah.
Pretty like a standard Canadian beer, don't you think?
Yeah, it's a clean Pilsner. I don't, you know what? I don't even know if I can rate it. I'm giving it a 7.5 because it's a good beer, and it's actually what I would draw the middle of my line of rating things better or worse.
So Patrick, I had already decided my number, and I came up with the exact same.
Oh my goodness.
Yeah.
You can't pick my numbers.
I don't care. I don't care. I'm picking it. I'm picking it. I don't care. I'm sticking with it.
It's gonna be the over/under on Ace.
It's just.
Jeez.
I don't know. Lena, did you drink some or no?
I actually had a different beer.
Oh, what did you have?
I have let me see here. What is this? Strawberries and cream ale.
Oh,
That's
my
awesome.
God.
It's by a Toronto brewery called Old Tomorrow. It tastes like if you. It tastes like
a
if
Dairy
you
Queen
eat,
sundae?
No, it tastes like if you eat a strawberry shortcake. Clearly, it's gotten me drunk already. But strawberry shortcake and a really light beer. That's what it tastes like. So it tastes delicious, like if you have a sweet tooth.
Actually, I kind of sound like, you know what, I might like that.
You might like it. It's not sour. It's just nice and sweet.
Because I did like the banana beer.
Yeah, if you like the banana beer, you might like this one. It's called
I don't know,
Strawberries
Lena,
and
so
Cream Ale.
Maybe I'm going to go get one of those.
Yep.
Sounds good?
So, do you guys know where I'm going right now?
Yes, that's why we were rushing the show, everyone.
Where am I going, Kev?
The 12 Pubs of Christmas.
That's right.
That time of the year again.
It's
Super
that time
spreader
of the-
event with Patrick Ceresna and the Graph Boys.
We are going to do our job.
Can you send us a picture every time you walk into a pub? So every pub we get a picture, so we
That's
can
a great
see
idea.
We
We should get this live tweeted.
we get to see
Yikes.
the progress of how drunk you get with every visit.
Yeah.
Oh,
Well, do you promise to do this?
I'll take pictures. I just don't know if I'll remember to do it.
I will.
when
I
I'm
will.
like
I will.
8,
Luke's
9
going, so I will
Commit to
let
it.
Luke know, and he'll take pictures of you. No problem.
Okay.
Oh,
So
okay.
under Patrick's
It's-
account, you can go after the fact, but I'll tweet it out, let everyone know that he's doing this. And he is going to tweet out every single the 12 pubs. I think you
There
should make
it
a
is.
little montage every time. You
Yeah,
can do
right?
4
Oh
pictures.
my God!
Oh,
Yeah,
here
you
we
know
go.
what? Don't put that kind of pressure.
Now we
on
have
me.
Do you know what?
we have a
Luke's
holiday
pretty-
e-card.
Yeah, Luke's pretty artistic. We should maybe get you should just give your phone to Luke and let him do it.
No.
Don't you think?
Well, I don't
Lena?
know. That might be a bad idea just because last time Luke left his phone with Patrick, it got stolen. So Luke
No,
might
but this
have
is the other way around.
He might have.
Well, this is
that's what I'm
exactly
saying.
it.
He
Like,
might,
I'm not trusting him with my phone now that he's.
Yeah, he's upset with that.
Oh, it's
Okay.
going to be a good time, bud. It's going to be good. It's what do
he's
you
been
guys have
preparing
planned?
for this all day long today, Patrick.
Yeah, no,
You know what? Listen, I got to give kudos to our some good friends out in London who started the 12 pubs or have been doing the
London,
12
Ontario,
pubs
we're
for decades.
talking about.
No, London, England.
London, England.
And
Oh, this is
they've
like
been-
a storied tradition that you've.
Yeah, and we went there and they shared with us this thing, and I said, "Well, shit, if they can do it in England, then we can frickin' do this in Toronto." And so we've been doing this for like 5-6. This is our, I think, 6th year now of doing the 12 pubs. It's a great tradition.
So-
started. We we got to give some kudos to where the origins are, but we're trying
Okay.
to carry on the tradition.
So
now.
listen, Patrick, you've just insulted an entire nation.
Oh my God! Well, I'm sorry. What did I do?
Okay, so
He does not know what he speaks of.
yeah, so you're doing England, and the people that actually came up with the 12 pubs of Christmas would not be happy to be lumped in with the
Oh,
English.
okay. Who did it?
Well, guess who would be upset about being mistaken for English?
The Irish?
Yes.
Oh no! Did I do this?
no.
wrong?
So the first,
look, I'm only telling people that
Yeah.
who showed me the 12 pubs.
yeah, well, the English stole it from the true drunkards. The first known origins of the 12 pubs of Christmas dates back to 1991, when Gary Levin and Paul Sheenan, proprietor of Sheenan's Bar, Chatham Street, Dublin, Ireland, introduced the first crawl with about 7 friends, including David Wall, Michael McGill, Cormac Kissan. I don't even know how to say Kissan. I'm butchering that.
Anyway.
Robert Kennedy, Paul Kilmurray, and I don't know. Anyways, that's where it's from.
There you go. Well, you know what? Now I feel like an idiot. That's okay. That's okay. I'm gonna go get drunk thinking about what an idiot I made of myself. That's all right.
Okay, well, wait. I got to tell you the official rules.
Okay.
Okay, the original rules of the 12 pubs were: you must select a drink you will drink for all the pubs. This cannot be changed. Oh, they allow a little more variety, so you
So you
could
could
say,
be like,
I'm gonna have,
I want whiskey or
Yeah.
scotch or whatever. And then
Yeah,
could
you guys
have
are just-
that.
No,
You're
see, no, we have to do 12
So
pints.
to be fair, we're doing the Canadian 12 pubs, which is different.
Yes.
It's our interpretation of it. not
Yes.
ours, Patrick's interpretation. You have 15 minutes at every pub to finish your drink unless otherwise
Jeez.
specified.
15 minutes?
Yeah.
Well, we're doing 30. We're doing 30.
All right.
Okay. Okay, wait. Unless otherwise specified by a nominated person. Each bar gets a nominated person. This person can nominate the skull, quote unquote, anytime before the 15 minutes is over. You then must finish your drink within 30 seconds of the nomination.
Oh my gosh.
You cannot eat on the crawl. Eating is cheating.
Yeah. Oh my
Eating is
God, that is the
cheating?
line. That's the line that my buddy Dougie uses over. So it's made its way through.
Yeah.
Eating is cheating. You're not allowed to eat. That's why I'm freaking eating bread right
What-
now. Just creating a pad that
Why don't you
just
drink
like.
a carton
The
of
next two
milk
get
also?
even better. They get even better than eating is cheating.
Okay.
You cannot talk to any member of the opposite sex on the crawl. That's a penalty ensues. I don't know what penalty. Even if she was serving behind the bar.
Well, why is that rule?
I don't know.
That?
They don't want you being
We
distracted.
have
It's like a bro code
a
thing,
woman
or
coming
what?
to no, but we have women coming on the crawl.
Yeah, so listen, we have to update this because this is
Yeah.
obviously 1991. They were
Yeah.
Neanderthals back then. No throwing up is the final rule. That's a penalty ensues.
that seems reasonable.
Yeah. The penalty for breaking any of the rules is an additional stinger had to be drunk at the next pub.
Oh,
And the stinger is a duo cocktail made by adding creme de menthe to brandy. That sounds
whoa,
awful.
that sounds disgusting.
That's like a cement truck, right? Like
Yeah.
it's just like curds in
That's
your
just
mouth.
gonna make you throw up, and then you're gonna have to drink it again. That's terrible.
It was made in the 1890s and nobody drank it since then. Okay, a stinger was a mix of one shot. Oh, there they explained it. Okay. Oh wait, Patrick, here we go. Most recently, the rules have been adapted, and the wearing of Christmas jumpers, which is a sweater in Ireland, is involved. You guys have evolved. Do you guys wear awful Christmas sweaters?
Yes.
Did you do?
But you know, this year I didn't have time to put on. I got a nice red sweater and I put on red underwear and red socks. So
That's all
like,
he's
I'm-
wearing.
I'm-
No pants.
Okay.
Yeah.
So you know what? I'm actually surprised you're not doing the true Canadian one. Will be kind of Seth Rogen. Didn't he have a Christmas movie?
He did?
Yeah, he
Oh,
had
I
a
don't
Christmas
remember.
movie, and they got so high, and then he went into church, and the baby Jesus was talking to him. The night before, it's called.
Oh yeah, I remember
Yeah.
this. Like a
Yeah,
secret
yeah.
Christmas party or something that they've been wanting to go to or whatever.
Yeah.
And his wife
That's
gets
a
him
pretty
like
good-
a whole bunch of different drugs or whatever.
Yeah. It's like such a good. By the way, did you see that Seth Rogen got invited to go see the Adele concert? Did
Oh
you hear
no,
about this?
because I thought that was like
So-
an intimate friends.
Yeah, so they had this intimate
Situation.
friends thing. You got to go listen to him talk about it. But the long and short of it, he gets invited to this Adele concert. So him and his wife decide they're going to go, but they just get completely and utterly baked beforehand. Then he gets there and he's all baked, Seth Rogen. For
Yeah,
him
but
to
that's
be
a
baked,
given though with Seth Rogen.
I know, but the thing is, the funny part is, it's like what he gets there and it's like, what the hell? Why are all these cameras? He's like, oh shit, it's tape.
No.
And he's like, and then he gets he's thinking about it, and then he goes, oh yeah, it's okay, I'll be in the back. He ends up being first row. And he's like, why am I ahead of like Drake and all? Anyways, you gotta go see him talk
Oh,
about it.
my
It's
goodness.
hilarious. He says, I can feel,
Yeah.
what does he say? I can feel Leonardo DiCaprio's eyes burning into the back of my head, wondering why I'm sitting, why Seth Rogen's sitting in front of me. And he's all high, and he's trying not
But I
to
feel like
look
that's all
high.
his stories. Seth Rogen's stories always
I
begin
know.
with, I
Actually,
got too high.
my favorite Seth Rogen story is the time he got high and he was going to travel. He had to go and he had to fly somewhere, and he decided to have a Burger King, one of those Whoppers that's got all the heat in it.
Oh
Like,
yeah, I remember
it's like the
this.
Firebird. Anyways, you got to go. It's Seth Rogen's.
Was
pretty
that in
funny
his
guy.
book?
No, well, I saw him talk about it, but
It
anyways,
might be in
he's
his
just fun.
book because we listened
Okay,
to
so we're
his
gonna let Patrick
book.
go. We're gonna call it
Yeah,
a
yeah.
night. Patrick,
Send us
give your-
pictures.
give your
Yo,
phone. I'm gonna go
all
tweet
right.
it out right now so that you have no choice.
Oh, okay.
And give your phone to Luke so that he gets the updates of the 12 pints of Christmas.
Okay, but they're not all going to include me. I'm gonna
No,
send a lot
you
of
don't
bar-
even-
It has
you
to
don't
be
even-
just you.
No, he doesn't need to have Patrick. That's fine. I will take. I just want a picture from.
I know,
every
because
pro-
like when I'm a real mess, it's gonna. I don't
Yeah,
want.
no,
that
you
shit
don't
on
need to
there.
put. I don't need to see you. I see you enough.
Okay.
I
All right.
just want a picture at every pub. Something interesting at every pub. So I want at least 12 pictures.
All right. Done. All right.
Okay.
Let's do this.
Okay. Have fun, buddy.
All right.
Have a good weekend.
Have a great weekend, everyone.
Okay, take care. Good luck.
All right.